Chairman, welcome again. Today's evening is going to be an interesting and meaningful interactive session. We had a fine combinations of knowledge sharing on this subject world over. We coined a group of individuals come from different disciplines in the financial service industry. Let me have the pleasure of inviting this panel to the dais. The first one is Stephen, who is the partner in PricewaterhouseCoopers, responsible for the risk advisory as well as business advisory solutions. He is a partner for Qatar as well as MENA region in PricewaterhouseCoopers. Prior to joining in Doha, Stephen was responsible for the London operation as well. Ladies and gentlemen, let me welcome Stephen to join the dais. Give him a big hand. With Stephen, I have a lady who has come from Scorsese, a reinsurer, underwriter in her own respects. Prior to Scorsese, she was working for Zurich Financial Services. I'm sure we'll have our intelligent inputs for this today's evening session as well. Let me have this. Boris, please. Thank you. We thought it's appropriate to bring in a combination of banking, insurance, and professional advisory to be much more value-added in real respects to the audience. Lloyd's of London has witnessed an outstanding professional, Andrew. Andrew has been a very successful underwriter and a good conference speaker as well. Ladies and gentlemen, welcome Mr. Andrew to the dais. Thank you. Right. The session will be formatted as it was introduced. I'm going to anchor the session. Conceptually, in layman's language, I'm going to put across the challenges we have and what are the root cause for this global turmoil. Then again, we'll cut across various issues relevant to various financial service dimensions. It will be interactive. It will be adding real value to your inputs. Then we'll also have a question and session thereafter and followed by dinner as well. Right. We recognize the fact there's a change in face of the world. We recognize the fact there's a change in face of the financial services. It was in August 8th, essentially, when Bear Stearns refused its own fund holders withdrawal, we recognize there's an issue there. It was August 9th when BNP Paribas denied two of the investment fund withdrawals, clearly, who are committed to toxic assets, was the substance slowly but steadily revealing. It was August 10th, me and my chairman, His Excellency Sheikh Fahad, were at historic London Goldsmith Hall. On the day of the signing ceremony, I was in CNBC. A clip was shown. A portion of the clip was shown. The question put to me by the anchor was interesting. Mr. Seetharaman, you are from Doha Bank. You have $350 million syndications arranged today. What's the price? I said, before you ask me the price, tell me, what's your concern? Do you think you're going to have the deal done today after witnessing what's happening in BNP and Bear Stearns? It was a food for thought. 26 banks, 13 countries signing for LIBOR plus 26 basis points was a good order for a good institutions with high credibility for a high sovereign country. Conceptually, I had no hesitation in endorsing, yes, we will sign the deal. This is the deal. Believe me, after August 10th, the world has changed. Look at the history in real order. In September, it was Northern Rock. Housing mortgage slump was clearly visible transatlantic. It has reached Europe as well. It was Dexia it was 40s, then clearly the credit crisis was visible. Conceptually, the investment banks taken the mortgage pool and created an investment product which are gilted AAA certified, asset based, not asset backed, clearly saw the market opportunity in real respects. As long as asset price inflation was visible, the mortgage was running at 7, the bond was sold at clearly 4%, there's a markup of 3% goes to the investment bankers. Perhaps 2 years before, if anyone brings in such toxic assets in a disguised form, anyone, any knowledgeable professional could have certified in real respects and taken it and put it in investment books. There's no question about it. Clearly, as long as the housing boom was visible, there was no impact. When the housing slump started in real regression, the world started beginning to realize this credit crisis is not ordinary infection, as the governor calls it. It transcended borders, transatlantic, it came to Euro, Asia Pacific, it has not left anyone unattended. A year before, if anyone has asked me a question, perhaps I have justified real economies are not going to be disturbed by this crisis, which is true. How could the real economies like Qatar, fiscal surplus, current account surplus, investable surplus, there's no question of toxic assets in real order, could face this turmoil? Clearly, the developing Asia has witnessed less than 10 billion, 9 billion to be the precise number, reported number, as on 31st March 2007. It was 12 billion in 2008. That's the scale we are talking about, which is insignificant in a world order. Conceptually, property boom and bust is not unusual. In 1990, we had property slump in the United States. We had Barings 1991 collapse, BCCA collapse in 1991. We had corporate governance compromise in many forms. It was Enron, the crooked Enron, lost 66 billion overnight. 2.5 billion was the pension fund lost. 55,000 people lost their job. It's not untold story in real respects. It is not confined to Enron, it's not confined to WorldCom, it's not confined to Adelphia Communications when the tech boom was done, it's not confined to Computer Associate, it's not confined to Barings, it's not confined to Satyam today. World has witnessed corporate crimes. There's no issue about it. When you compromise on the culture of governance in real respects, you have always had instances where real order needs to be brought in and solutions needs to be found in corporate discipline. That's a structured, manageable, measurable, controllable outcome we have had. What we are witnessing today, if you look back again in real respects, clearly it is not the Bear Stearns story. It was Bear Stearns which was bought for 120 billion by JB Morgan. It was exchanged like a toy. Clearly, I had a privilege of sitting across on September 6th with JB Morgan's chief executive, Jamie Dimon. He was telling me he was asked to take over this in all respects by the Federal Reserve of the United States. It is not confined to JB Morgan alone. Believe me, it was on 6th of September, I had a privilege of addressing on the same day with JB Morgan Emerging Market Conference in New York. People who have seen New York, Marriott Marcus it's called, 42nd Times Square, diagonally opposite the Digital Advantage, the huge display of Lehman Brothers. It was on the same day I had a television interview in Fox TV, one of the Lehman executive, one of the Columbia University Business School executive, and myself was anchored. The question put to me by the famous anchor in Fox TV, Fox Business Channel, Alexis, was, Mr. Seetharaman, what do you think of the sovereign funds? A year before, trust me, 2007, when the sovereign funds was widely questioned world over about this, I had the privilege of addressing in Bloomberg as well as BBC. Clearly, sovereign funds, countries like Qatar has conceptualized as a real world order to generate for the prosperity of the common good. Clearly, I was elucidating in real respects the sovereign funds, the excess over the budget has been channelized on 4 important funds. It was Future Generation Fund, it was Oil Fluctuation Fund, it was Qatar Foundation, and Health and Education Fund. There's a structured transparency and disclosure. So a question remains, when there was oscillation in the minds of governors world over about the integrity of the sovereign funds, everyone has clarified clearly these are genuine creations, wealth creations in real response, which was subscribed to formate, whether it is Citibank of 7.5 billion from Abu Dhabi investment authorities, 5 billion came from, it is Merrill Lynch, to Merrill Lynch by Kuwait Investment Authority, 2 billion has gone for Istismar to Barnes. So extraordinary case studies was there. On that context, the question was put to me, what do you think of the sovereign funds? For which the Lehman executive was mentioning, absolutely we measured the on-balance sheet and off-balance sheet risk. There is no question of losing out Lehman. It was a Korean deal which was in the offing on the day. 13th of September, when I returned to Doha, clearly I couldn't believe, when 8th of October was when I was cutting through New York for the fund meeting in October 2008, Lehman was no more. The world has witnessed, it's not confined to Bear Stearns. It is not confined to Lehman. It is not confined to Bradford Brindley. It is not confined to today, Lloyds TSB. The world is going through a question. Where is the global governance? Where is the global transparency? Where are the auditors? Where are the analysts? Where are the corporate professionals who are disguising in real respects? Question remains. A lot of unanswered questions because the world is witnessing through extraordinary phase of change. This change is real. The world order, as I said in my preface, is real. Conceptually, if you look at the case studies, what we have witnessed, it is not confined to financial economies alone. It is not confined to investment banks alone. It is anyone who has got infectious greed in the minds of the corporate entity has perished the institution as well as the society. A public financial institutions with its own respects has to have accountability in real order to the society in addition to the shareholders. Conceptually, if you look at the framework which has been defined world order, we have compromised in real response to the business model which are created to maximize the value advantage of one side of the coin. And clearly, the regulators have measured it, but they couldn't manage it simply because the scale and the width at which the globalization and the instantaneous communications was redefining the global space. Nobody could measure it, nobody could manage it, nobody could control it. So it is not confined to banking community alone. It is not confined to the auditors alone. It is not confined to the standards mentioned by the World Bank alone. If you look at the global governance in real order, we have established standards for every single knowledge disseminations, information dissemination in terms of real order comes from IMF. When it comes to economic outlook, we have twice spring meeting as well as the fund meeting takes place in September, October. World over, biggest business community attends. Again, clearly insolvency has been defined by IMF. You have IFRS clearly deciding the accounting standards. You have regional regulators, local regulators who are mentioning the integral part of the overall framework confining to the configuration of individual macroeconomic fundamentals and the framework of the consumer index, framework of the governing socio-economic fabric. There's no question about the global framework getting compromised, but what is it problem is all about? If that is not measurable, how this problem has cropped up? Clearly, we have to necessarily recognize the global governance is all about converging real value advantage to all the stakeholders. It's not the shareholders. It is not the staff. It is not the regulators. It is not the public. It is not the customer-based deposits alone. It is the circle as a whole as being the core foundation for us to realize the responsibility is total. Accountability is unambiguous, clearly reflecting the fact the stakeholders are very many, and today, it is not confined to one single institution. It is not confined to one single country. It is not confined to one single continent. It transcends borders. It transcends borders in real respects. I have clearly acknowledged in every single forum, Qatar can never be impacted by this purely on account of fundamental finance, fundamental economics. How could you expect 8 years of surplus budget? How could you expect the macroeconomic fundamentals and intrinsic value of the economy so strong, extrapolate the existing fabric of real revenue generations? It has to run in social respect, every single order, in terms of economic respects, a huge surplus in the years to come. So why the stock market is depleting? Question remains. So today we are living in a world which are interconnected. in a globalized world which is absolutely interconnected. There's no question in real order today one can decouple countries like the United States, which are extraordinary in its own respects. 20% of the world imports, 12% of the world exports. Name it, every single intrinsic manufacturing base has been well founded. It's an industrialized nation in every single dimension. Every single copyright has emanated. Creativity has been the core foundation. Today has to go through a temporary turbulence. The world has changed. It is not confined to one single continent, and the world will become a better place. Trust me. The business will become very positive. Trust me. World will learn positive lessons of it. Our children and grandchildren will learn the true world order in ethical, moral response to the changing business definitions. Then gross domestic productivity has to become gross domestic happiness. That's the change we are witnessing in real world order. If that is not true, trillions of dollars, 16 trillion is American dollar economy. American ambassador is here. Yesterday we had a meaningful discussion. He is a finance person per se. He raised some of the questions which are absolutely thought-provoking. These toxic assets or subprime value definition will not destabilize any single country. Trust me. If you quantify in real respects, trillions of dollars are accounted by the investment banks. These toxic assets in real world order cannot destabilize one country, because especially if you look at the scale of those economies which we are talking about, there could be temporary disturbance 1 year, 2 years. Financial economies have to come to terms. Regulators have to come to terms. The altercations in terms of framework is being aligned in real response, whether it is liquidity or capital adequacy or in terms of supervisory framework. The stability, market stability has been the fundamental role and principal governance of every single regulator. It is getting aligned. It is getting integrated in real response to the global changes. But the depth and width, the speed and acceleration has taken place is not well founded by any economic pundits, whether it is Federal Reserve, whether it is Euro, whether it is Bank of England, whether it is GCC governance. Still, we have to necessarily respect the world order in terms of convergence. It was on October 12th, the new world order, when it was clearly visible, when the fund meeting was on. I had the privilege of meeting the Morgan Stanley vice chairman. I had a breakfast meeting, and he was telling me his deal with Mitsubishi. It was supposed to be 20% for $9 billion, 20% stake, $9 billion. Within 2 days, the whole company was available for $8 billion. There were no sellers. That's a different issue. The market capitalization has regressed in real order. How could you expect 215 billion of HSBC to subscribe to 95 billion? How could you expect 360 years old Royal Bank of Scotland of 169 billion as to diminish to 16 billion? How could you explain Santander coming down? How could you expect National Bank of Abbey clearly signaling a new world order in every single respect? Barclays, 95 billion today, it's worth 16 billion. So clearly the reflection is not confined to the globalization alone. Clearly there was no compromise on the regulators in real response, except the businessman had the aptitude of converting the common good into greed. Conceptually, you have a problem definition in the business model. That's getting realigned. There's nothing wrong in the change. There's nothing wrong in the world order getting realigned to business models which are real. Countries hitherto practiced in terms of corporate history or the continent history or countries' history, like Iceland, has to come to terms to create a balanced economy and balanced growth to sustain credibility to the value advantage of real economics for the common man, or for the common good. That's the change we are talking about. Contentious issues are always there between the industrialized nation and developed nations, developing economies today. Take, for example, Kyoto Protocol, Doha Development Round. Agriculture subsidies or farm tariffs is not a new order. While we permit WTO in real response to flow of goods and services, what about in real response to the humanity? The world is getting an immigrant society. That's what the Constitution of America is all about. The change which is taking place, every single part of the world is becoming an immigrant society. Take it from United States to New Zealand, The width and depth clearly telling the mix of the right proportions of various combination of people, various civilizations getting mixed is not something new. So having a second home and having a second citizenship is not something new. That's the kind of change we are sitting. But the world is interconnected. The world is coming together, it is converging in one single responsibility accounting. That is the true and fair picture of real economy. That's a positive lesson. That's a positive message. Conceptually, even in banking, when I look at it clearly, the emergence of a doctrine of Islamic principles on Islamic banking has been a telling story. Sharia pronounced clearly value systems, which is not only prohibition of interest and gambling. It also confine yourself. You cannot do a deal without underlying assets. That's precisely the reason when AFI declared clearly 90% of the sukuks were disqualified last year. Simply because the government used to say, I have a concern of the sukuk, way back in 2006, I remember. So if you look at the changes which are taking place, it's bringing values. Even Sharia, if it is not practiced in real order, how could you add value to the mutual cooperation and mutual principles? Sharing and caring. It doesn't work. It's a practice which went wrong. That is the lessons we have to. No country is wrong. No auditors are wrong. No individual corporate is wrong. No politicians are wrong. Clearly, we have to come together in terms of convergence. That's precisely that today we realize pre-globalization, clearly the economics was under the seat of politics. The globalization era is a convergence of economics and politics, really, and precisely the reasons why public-private partnerships are an integral part of the global combinations. That's the new world order. This order can only give positive lessons in every single form. Every single value definition, if you look at it, it's all going to give a substance which is adding real responsibility, clearly emerging as the right response. With my pursuit of understanding as a professional banker, when I approached His Excellency Yusuf Kamal in 2002, I asked him the question. Because this country is par excellence in its value system. I got inspired as an individual, as a professional. I submitted myself the value systems. Right from 2002, it's been my privilege and honor to present this country as an economist or a banker globally. Right from Japan to Singapore to Turkey to China to United States, multiple forums. It was in 2002 I asked His Excellency Yusuf Kamal, let me understand the dynamics of it. What are your priorities? His answer was very simple. As a young country, we need to work hard. We got our priorities right. I asked him the simple question because I was sitting across in Oman, watching 30 years, non-callable, 9%, you're taking a sukuk, and what are you going to do? That was my question, because Qatar was an OPEC country. Conceptually, this is an extraordinary decision. You could have taken this money to put flyovers, bridges, aerodromes, showcase it. It didn't happen. It didn't happen in Qatar. It was a real vision of this country to get into the right direction, industrialize the expansion. Having realized, as I said in my preface, got into the right track, do the hard work. That's the vision. The rest will follow through. Commitment comes to commonhood, then your responsibility is real. Knowledge comes to personalities, your efficiency is real. There's no question. History and civilization has taught only this lesson. If this is not the right vision, as I said, Her Highness pronouncement of setting up Qatar Foundation when the world was not clearly seeing what was Qatar is all about at the time, bringing Carnel to Carnegie Mellon is something which is extraordinary. Qatar didn't have the billions of dollars at the time to showcase on a structured building. It is a knowledge which was the core foundation for you to realize. Then the social governance, it comes in real order. So hard work was done. That's why the break came clearly in 2001, 2002. Then it can never look back in terms of real economic progression. Whether it was 15 billion or 20 billion or 39 billion today in terms of LNG production, that's incidental. It will reach the social value order. It will get in real response to common happiness. As long as governance is prolific in its vision and professional execution. That's what the character of this country. Clearly, Mr. Yusuf Kamal, His Excellency Yusuf Kamal was mentioning to me, that's the hard work we want to do. His Highness' vision was clear. So, if you extrapolate further, it was Ali Sharif who was there in 2005, September in Washington, I had a privilege of showcasing Qatar, including Qatar Financial Center. The then Commerce Minister, the Finance Minister were there in the dinner table. Peter Sutherland, the then BP chairman, now today the chairman of Goldman Sachs, was there. Sita, I want to ask you one question, because you were anchoring, you were showcasing Qatar. What inspired you as an outsider? I said, I got inspired by the sheer governance. That's true. The bottom of my heart I'm saying it, because conceptually, the visibility is there in real response only if you are intrinsic, if you are knowledge driven. And that inspired clearly in every single dimension. It is the women participation in the governance. It is literacy. It is Shafaullah Center. It is Qatar Foundation. It is the energy city. It is the extraordinary phase of the global combination of the industrial conglomerate, whether it's Chevron, Exxon, Conoco, Japan Drilling, Total, name it. It's all came together simply because the open door mindset of clearly the governance is visibly driving the change to professional order. The rest are all incidental. With this perspective in mind, I told clearly it's the governance in two respects has been the core foundation. The rest are all the things to follow. In real response to the change in phase of the financial service, coming to the alignment of the subject which we put on focus, the rest of my speakers are going to be clearly questioned on those grounds because from their discipline, functional discipline. If you look at the overall phase of changes, if you look at the scale and the depth and width of the change which is taking place in real world order, it was the governor and me were together on October 12th, along with the rest of the bankers in Washington. And the question put to us is this market, that is the GCC market, is going to have the real reflection of the global slowdown? We realized it was the governor again putting the stress test in real order right from May, June. It is real estate market. We know it is going to go through the correction. It is not going to go through extraordinary downfall. Commodity market was not anticipated in real response to the current level of pricing. It was 11 July price. People misinterpret clearly as the cornerstone. 11 July it was 147. It was 147 simply because the commodity market was hedging in real response to the currency risk. When the currency is weak, clearly you hedge the risk by buying commodities. It is not the surge in the oil demand was exponential, because of which the oil price was going up to a level of 147. Clearly, if you look at a 3-year base, it is the real response to the oil futures, which was gone up by 365%. So, when the drastic diminution took place from 147 to today, nearing $50, again, the government clearly, in January when we met, I did predict it will reach $50. Clearly because of the change in phase of the quantum physics. It is nothing magical about it. If you look at the dynamics of the change which are taking place, oil futures are nil now today. Real demand has not drastically diminished either. It is only the moderate growth in real response to the emerging economies' requirement. Clearly, reflection is in the price. So it is the stock market which is facing the problem, purely because hedge fund holders who came here on account of the market liberalization, who came here, who invested in this marketplace, disinvesting and running away from this market simply because the home market is drying up, liquidity is at stake. Not in this market, in their home market. Current account surplus, if you look at today's Qatar, still it's running in positive terms. Even this year, in 2009, I have no doubt in saying that, endorsing even if the oil price is $35, $40, with the potential what we have in terms of overall fabric of economics, it will run in surplus. There's no question. In real response to the overall economic progression, the stock market should not deflect. It is the reflection of the market liberalization. Your stock market has opened up. Your real estate sector has opened up. Your financial centers have come in. So the liberalization, perhaps beyond definition, in one world order, is reflecting on account of the globalization. But the long-term business model is correct. Conceptually, though nobody has anticipated the world will get realigned at this pace in current context. So the stock market reflection is not the barometer for us to realize the economy is doing well or not. It is not the barometer. It's the reflection of fear. It's the reflection of greed. People buy the rumors, sell the facts. How do you explain this? Otherwise, it is IMF. If you look at the global economic outlook output released on October 9th, 2008. The governor was there. We had a copy of it. We looked at it. With the oil price, $50, still it should project 28% growth. I'm not taking this format in real order. I was with the governor in Korea. He was telling it's double digits. I can't confine to 20% up. Today, in all parlance, economic pundits can predict this country will grow not less than 9.4 to 9.5%. Purely fundamental economics. It is going to run in surplus budget. It is going to run in current account surplus. It is going to run investable surplus. Where is the question? So why the stock market should take the beat? Look at the price earning in real respects. Look at the price earning multiples. It was the decision of the overall governance on reflecting the market sentiments globally. Soon after the October fund meeting, we all came together, the bankers got together, the central bank got together, put in a measure clearly showcasing we are real economy, we are going to produce real revenues, we are going to produce clearly a good dividend payout, and that's precisely the reason in October, most of the financial institutions have predicted what could be their dividend payout. We committed to it, we responded to the challenge in spite of the fact the market has regressed not less than 28% only in the last quarter. Only in the last quarter. If you look at the last year, there are only two economies which were facing the doldrums, to the minimum as far as stock market is concerned. It was Japan, 28%. It was Qatar, 28%. What has happened in 2009 is not quantifiable. It's not measurable because the stock market is not driven only by fundamentals. So the real world order will come to ground reality only if people believe the intrinsic value of the industrialized nation like this, clearly signaling, propelling not less than 10% growth. That's the kind of scale we are talking about in real order. If this is the governance, if you look at the overall industrial expansion in real response, you have enough reasons for us to believe the 77 million metric ton LNG has to be produced. It is going to be produced. It is going to be consigned right from Japan to United States. As I said in the video clip, 23 million metric ton has to go to Golden Pass Terminal to Houston by 2010, 2011. So clearly, there is a reflection on the economic progression in the fabric. If you also look at the distribution, right from Nakilat, the real order in terms of production and distribution capacity could be the core foundation for us to realize what sort of opportunity we have. I'm going to discuss, after discussing with the various panelists, what sort of value system they see in the global economics. But I'm just putting the preface. Definitely we'll run through what are the real opportunities for every single business community. Whether you are a corporate, or whether a proprietor, whether you are small or medium enterprises, you have an opportunity. That's the purpose of the sessions. At the end of the day, you have to realize this is an opportunity in real response for you to realize there's nothing intrinsic weakness in real response to the global challenges. That is, we have to understand the dynamics of it. If you extrapolate the projects, industrialized projects and the infrastructure creation which has been budgeted, which I'm going to let you know clearly what are the various opportunities in economic response, you will realize how much you can prosper in real order.